The gold bugs say, the treasury market's going to implode, the dollar's going to go to zero, gold is going to replace US dollars. That's all horseshit. But it contributed to my baldness. Rick, when are the metals price going to move, in particular the gold price? I say, I think they're going to move in 2000. In 2000, gold was $253 an ounce. Now it's $2,700. It's moved at 8% compounded for 24 years. This year was just playing catch up. The market share of precious metals and precious metals related assets in the United States relative to other savings and investment classes is only 0.5%, which is to say less than 0.5% of total savings and investment assets in the United States is denominated in precious metals and precious metals related assets. The 4-decade mean is 2%.
In today's episode, Rick Rule, one of the most outspoken and experienced voices in the precious metals world, didn't hold back in his latest interview. He took direct aim at most gold and silver commentators, calling their claims nonsense and accusing them of misleading investors with unrealistic expectations. According to Rule, the much-hyped 2021 silver squeeze was a prime example of this misinformation, with commentators promising dramatic results in just a few weeks. Rule, however, insists the real impact will take years, predicting the squeeze will unfold over the next 5 years, not in 5 weeks. Silver, Rule argues, is destined to outperform gold, but investors need patience and a clear understanding of the market. He is 100% confident that silver will eventually rise faster and higher than gold as it has in past bull markets. The problem? Most people lack the discipline to wait. Rule warns that anyone expecting quick riches from silver is setting themselves up for disappointment, as the market will move on its own time, not on social media hype. He also delivered a scathing critique of the US dollar and the official inflation narrative. Rule claims the true rate of inflation is much higher than the government's CPI figures, suggesting a 7.5% annual decline in purchasing power. Your savings are costing you, he declared, emphasizing that gold has only kept pace with the dollar's collapse over the last 2 decades. In his view, the dollar isn't stable. It's just the least bad option among global fiat currencies. Now we'll show you the best clips of the latest interview, but first, hit the like button, smash the subscribe button, and check the pinned comment because we're offering an exclusive discount on NordVPN, an essential tool for gold and silver stackers who value privacy and security. Make sure you safeguard your online activity and protect yourself from prying eyes. And if you want to learn how to stack and how you can benefit from the gold-silver ratio to make savvy investment decisions, check our guide at goldsilverstacks.com. Enjoy the episode.
The gold bugs say, the treasury market's going to implode, the dollar's going to go to zero, gold is going to replace US dollars. That's all horseshit. That's all horseshit. And it doesn't have to happen. If the market share of precious metals reverts to mean, which is what I think is going to happen, and I think it's going to happen over the next 5 years, demand for the stuff increases fourfold. Fourfold. Now, people ask me for price, targets. I have no earthly idea. And I couldn't care less about information that's irrelevant. All I can say is if demand increases fourfold, it's going to have an impact on price. I can also say, in direct answer to your question, I don't know why, but in prior gold bull markets, the market has been led by gold. At a certain point, when gold establishes the momentum and the generalist investor buys the precious metal narrative, leadership switches to silver, and silver rises further and faster than gold. When will that occur? I have no earthly idea. Will it occur? I'm 100% confident that it will. I think the US dollar will be the world's reserve currency for the rest of my life. I think the hegemony of the US dollar will be called into question because of the idiotic imposition of US policies the weaponization of the U.S. currency. But I think, to quote Doug Casey, the dollar is the worst currency in the world, with the sole exception of all the others.
Yeah.
So I think the dollar will continue to do well if you measure it against other fiat currencies, which will do less well. But I think for Americans or for foreigners who have chosen to denominate their lives in US dollars, that the maintenance of purchasing power in the US dollar will increasingly be challenged, not relative to the maintenance of purchasing power in Canadian dollars or euros, but in an absolute sense. And I think it's important for your listeners to understand the reasons why, uh, with the caveat that it might be boring. It's arithmetic, not narrative. I think the people who were interested in the arithmetic around the silver squeeze didn't understand that they needed to be persistent and tenacious. In other words, that the unraveling of the dichotomy between the physical market and the paper market could take 5 years to unwrap. And many of the youngsters who were involved in the silver squeeze had a much more limited time frame. They wanted it to happen in 5 weeks or 6 weeks. And I suspect that many of them employed much too much margin. If you're paying margin interest for 5 years, if the event that you're hoping to that you're hoping to participate in takes 5 years and you're paying 8% a year, you might not be early. You might be wrong.
Yeah.
If you're an interest payer. And I think that's what some of the youngsters in the silver squeeze ran into.
In today's news recap section of the episode, gold stalls ahead of Fed rate decision, focus on 2025 outlook. Gold prices were little changed on Wednesday as investors remained cautious ahead of the U.S. Federal Reserve's policy decision, which is also expected to offer guidance on its outlook for next year. Spot gold inched up 0.1% to $2,649 per ounce. Gold price actions are less of an arrow, more of a feather at the moment, and sort of drifting on book squaring, independent analyst Ross Norman said. Attention will be on Fed policymakers' updated economic projections for 2025 released alongside the decision, particularly regarding how much more rates are expected to be eased next year. Markets are pricing in a 95.4% chance of a 25 basis points cut in this meeting, expected to be announced. There's only about a 16.3% chance of a reduction in January. If the dot plot points to 2 cuts or less for 2025, markets would read it as hawkish, and the U.S. dollar could see another round of strength, OCBC analysts said in a note. A stronger dollar makes greenback-priced bullion more expensive for holders of other currencies. Meanwhile, the Bank of Japan, Bank of England, Riksbank, and Norges Bank will deliver their policy verdicts later this week. Investors will also pay attention to Thursday's U.S. GDP data and inflation data due later this week, both of which could impact bullion demand. We expect gold to build on its gains in 2025, UBS said in a note, adding that central banks should continue to accumulate gold as they diversify reserves, while investor demand for hedges should rise further, boosting inflows to gold exchange-traded funds. Now we'll show you more clips, but first, smash the subscribe button and check the pinned comment to get yourself the best VPN deal on the market. You'd be crazy not taking advantage of NordVPN to safeguard your privacy at these prices. Enjoy the episode.
The measurement that people use in terms of the deterioration of the purchasing power of the US dollar is the CPI. That's the stated rate of inflation. And it's fiction. It's absolute fiction. They suggest to you that CPI as a measure of inflation, and maybe it is defined inflation, but it's no measure of the decline in purchasing power. Your listeners need to ask themselves, in the last 4 years, since 2000, where the CPI stated rate of inflation has varied between 2.4 and 2.7%. So let's call it 2.5% compounded. What's happened to the price of gasoline in 4 years? How about healthcare and health insurance? Mortgage interest rates have doubled. The price of groceries is a political issue. And of course, the CPI doesn't include tax. Have your taxes gone up in 4 years, Chris?
Yes.
I would suggest to you that for the basket of goods and services consumed by Chris Marcus or Rick Rule, that the purchasing power of the US dollar is declining by about 7.5% compounded. Here's the crux for the dollar. If they're paying you 4.2 in the US 10-year Treasury, in a currency that's declining by 7.5% a year, your savings are costing you. It is in circumstances over time where investors are concerned about the maintenance of their purchasing power in fiat instruments that gold does well.
Yeah.
If you look at the period 2000 to 2024, gold has kept pace with the deterioration of the purchasing power of the US dollar. One could say that gold isn't up from 253 to 2,700. One could say that gold hasn't increased in price sevenfold, but rather that the dollar has deteriorated in terms of purchasing power sevenfold. And I think what you saw this year is the beginning of the realization, just the beginning of the realization of that calculus. They had anticipated that the silver market was broad enough that it could accommodate our demand in almost any size. And while the silver market is very, very, very broad, the silver market was then, and I would suggest is today, much more liquid, or much less liquid than you believe. While there's a lot of supply in places like private ownership by the Indian peasantry, that isn't good delivery silver. And in the case of the Sprott Physical Trust, we could only buy silver that was, in the LBME or in the COMEX good delivery form.
Right.
And we were having days when there was $50 million of inflow into our physical silver trust. No problem, says Rick. We clean out Toronto. Okay, we go to Montreal. Clean out Montreal. Interesting. Well, no problem. We go to Chicago. We clean out Chicago. This is becoming concerning. The market's front running us. We go to New York. We clean out New York. It turned out that London was ultimately able to accommodate us. But London wasn't able to accommodate us overnight, which is what we were used to. We were used to buying silver and having the silver go from somebody else's pile in a vault,
right,
through a screen to our pile in a vault. What happened was that we cleaned out all the piles until we ran into the final piles in London and Zurich, which accommodated us. I actually think that the young adherents to the silver squeeze were onto something. I think their problem was that they bought a long-term narrative and they took in short-term tactics. I actually believe that there are imbalances in the silver market, in particular between the physical market and the paper market. And that's what we ran into. There's tons of silver that trades every day in the physical markets. Some days, 100 times more silver transacts in the paper market than exists for good delivery in the physicals market. It was our bad It was our bad fortune to run into that, literally.
What do you think? Do you agree with Rick Rule's prediction that silver is set to outperform gold, but only for those patient enough to wait? Is he right that most market commentators are just spouting nonsense and misleading investors with unrealistic hype? Let us know your thoughts in the comments below. Do you side with Rick's no-nonsense approach, or do you think he's being too harsh? We'd love to hear where you stand. Now check this video right here because it's a perfect fit for you. And I'll see you on the other side.